Okay, we had the market rally today, building upon yesterday's CPI rally. We're going to get the PPI wholesale inflation tomorrow. We got a candle of indecision today. Candles of indecision can be either continuation patterns or reversal patterns, and we have a possible candlestick reversal setup, which I'll show you in just a moment. We're hitting yet another resistance level. The Dow was up 463 points, up 1%. Nearing that 45,000 level once again. S&P was up almost 21 points, up 0.32%. The Nasdaq was up 31 points. Russell was up 2%. Russell on a roll. A powerful move yesterday and today. Then the VIX was down 1.63%. But pay attention to the Dow and the transports. Remember, the Dow hit 45,016, closing just slightly above the previous high. But it didn't make a new intraday high above these two peaks, 45,074, 45,054. It did close above it on a daily basis, but it didn't move above the intraday highs over here, just above the 45,000 area, that little miniature double top there. Dow had a powerful move today. Does the Dow move above that level? If it does move above the level and above the high from a few days ago, we reached 45,016, a couple of weeks ago. This is the weekly chart, would have been about 3.5 weeks ago or so. Do we see the Dow and the transports get a divergence right here in the most recent price action? Should the Dow do that, move above these highs as well? Something worth paying attention to. Divergences often will mark turning points. And again, transports not moving near the late 2024 high, the Dow could take it out, get a larger divergence than you could get one in the more recent price action. Just something worth paying attention to. And it may be the Dow goes to a new high and the S&P and the Nasdaq do not. Sometimes it camouflages what's going on. Dow got this big wide range body again. Yesterday, got it today. Whereas the S&P 500 got a narrow range body in the form of a spinning top. Nasdaq got another narrow range body with a black candlestick today. Well, you get the Russell and the Dow getting these wide range bars. Dow up 1% today. The Russell up nearly 2% today and 3% yesterday. Yet S&P had a small gain, and here on the Nasdaq, we were only up. Nasdaq 100 was only up 0.04%. It was only up by 9 points. Got another black candlestick. This one, nothing became of it. This one over here, nothing became of it. Sometimes black candlesticks mark turning points, other times do not. Often they are associated with a turning point. Whether this one is or not could depend on what bar we get tomorrow, because then now you have a potential evening star. And I'll show you on the S&P 500, if we get a gap lower and we get a big ugly red bar tomorrow, you got a potential evening star reversal, which is a 3-day candle pattern reversal. Nasdaq's overthrowing some resistance, so is S&P, some resistance in the weekly time frame, and I told you that could happen. But if we reverse by the end of the week, we may not close there, and you may end up having a topping tail in the weekly time frame at that resistance level. Something worth paying attention to. And then also we have another potential head and shoulders. If we come back down, all the way back down to this low on August 1st, if we start coming down sharply, dropping below the 10 and 20 period moving average in the 50s, right there, you can barely see it. If we start moving back towards these 50 period moving averages, then again, you have the possibility of a head and shoulders pattern developing. More about that on the S&P in just a moment. Here's the Nasdaq 100, though. The S&P in just 1 second. Just want to touch briefly on the PPI inflation. That's going to be tomorrow before the market opens. We got the CPI. We're going to get the PPI inflation, wholesale inflation. And oftentimes, again, not always, but oftentimes you'll rally with one and sell off with the other. I don't know if it's going to play out that way this time. Sometimes you rally or sell off with both. Now, the previous month, we saw the CPI inflation tick higher, but we saw the PPI move lower. It's now expected to turn back up. Does that end up rattling markets a little bit? Or does Trump come out and say something regarding tariffs and, the semiconductors tariff announcement, or something with pharma with tariffs? I expect Trump is going to come out and say something with tariffs that's going to rattle the market. I expect our seasonality is going to play out. I think it's just been delayed. I do think it is going to play out, though. I expect to pull back and then to resume the advance. Now, right now at the close, the probability is at 93.7% that the Fed is going to cut in September. I don't think they will. I think that the upside risks with inflation is going to keep the Fed on the sidelines. I don't think they're going to cut until they panic. Maybe Powell caves, to all this pressure from Trump. I sincerely doubt it. Again, look at history. Fed didn't cut January of 2001 until they panicked. The bear market had already started and we started crashing. 2007, the market peaked, began to crash. Inflation was much higher than it is right now. The inflation kept rising, and yet the Fed panicked, did jumbo cuts. In both of those situations, the Fed panicked, did jumbo cuts. You're likely going to see the same thing happen again. That's just my take. I think the Fed is going to sit on the sidelines because inflation, as I correctly predicted, is ticking higher. Likely going to see the PPI begin to tick back up now, bottoming out and beginning to rise. The PPI, wholesale inflation, is expected to rise. Previously, on a year-over-year basis, it was 2.3, is expected to rise to 2.5%. The core was at 2.6, consensus is at 2.9, forecast is for 2.7 here on Trading Economics. Month over month, for both the core and the headline number is supposed to be at 0.2%, so it is expected to rise on a year-over-year basis. Last time we saw a very different picture between the CPI and the PPI. The CPI ticked up and the PPI ticked down. But again, could see it reflected, an uptick in PPI reflected in this coming number that we're going to get tomorrow. Comes in hot, then maybe we see that pattern where we see the CPI give us a rally, the PPI give us a sell-off, certainly possible. Got a candle of indecision today on the S&P 500. Candle means nothing unless it is confirmed. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. Follow the link. It'll take you to a secured site, and you can donate any amount you want. I thank you for your consideration for that. The VIX. And I had a trend line with the shadow, excluded the shadows here, and again, we're down at this area, coming back down towards this area here. Again, a candle of indecision, very similar to the S&P 500. We had the volatility here. Again, the Bollinger Bands are saying something's going to happen. As they tightened up, we broke out. There's no follow-through to the reversal with our bearish bell-hold candlestick. MACD rolled over at the center line. If it moves into positive territory, forming yet another reference point here of a divergence, then we could see volatility increase if we get above our 50-period moving average. See the RSI move back up above 50. We have these bullish divergences. Looks like another one is now developing here with our pullback. The stochastic starts turning back up and here and rolling over on the S&P. Get back above the 50 period, the bad things are going to start happening on the S&P 500. And I think we'll get a pullback, but I do think it will be bigger than what we've had. Seasonality suggested we were going to get a sell-off at the very beginning of August. We did. Now we're making new highs. Seasonality is wrong sometimes. I think it will end up being correct, but just delayed. We'll still get an August sell-off. Might spill over now into September. If it drags out for more than just a couple of weeks, should we begin to turn. Divergence on NVIDIA. It's slamming into major resistance in the weekly time frame. We're getting candles of indecision. NVIDIA was down nearly 1% today, down 0.86%. Again, if Trump comes out and makes some kind of announcement, tariffs or semiconductor tariffs, again, which expected to get more information about that, then we could see the market rattled. I wouldn't ignore this divergence. And people get lulled into a false sense of security. Oh, it didn't happen already, so there's no way it's going to happen. Again, I think we get a pullback, but then I think we still go higher. I think we could see a peak, again, going into September, October. Maybe it drags out a little bit longer. The trend line in the weekly time frame, I think, will turn off of it and go back up and hit it again, and I think NVIDIA will top, and we have a massive broadening formation. We turn down, I could redraw my boundary from whatever peak we have right here. NVIDIA gets real quiet. Oh, nothing's going to happen. And then, boom, it gets a big, ugly day. The complacency quickly turns to fear. It always happens. P500. I showed you the wide range bar on the Dow, and we had another big bar on the Russell. We got a narrow range bar that was a black candlestick on the Nasdaq that pretty much closed flat. The S&P closed slightly higher by about 20 points, 0.32%. And we get this candle of indecision. This could be a reversal bar. Now, the candle of indecision, listen carefully, it could be a continuation or a reversal. We do have resistance in the weekly time frame. We're slightly overthrowing that. Hitting another trend line, or just under, I should say, another trend line of resistance, or throwing another one in the daily that I've been showing you, but hitting another one daily that I'm going to show you in just a second. Watching these trend lines, and again, I told you, we may overthrow them if we try to rally to new highs to form this divergence on the RSI, but do we close there by the end of the week in the weekly time frame? We may have topping tails before the week ends. We have a possible evening star, called an evening doji star, because we got a doji, or a spinning top looking candlestick, and that is where you have a wide range bar, you gap higher, a doji, or in this case is more of a spinning top looking candlestick, a small real body. It's followed by a gap down and a red bar, and I've marked it over here, and I'll move it, but I wanted to show it to you without the red bar there, but it would look like this. And again, this is just my own drawing here. It would be where we gap down, and maybe you push back up and fill the gap or get a topping tail, but you gap down and you get a wide range bar to the downside, very much as the wide range bar to the upside. And that would be the evening doji star, is a reversal pattern. Now, again, the pattern has not completed, so it may not form. This could be a continuation pattern rather than a reversal candle of indecision. Great Scott, did you hear what I said? Yes, a candle of indecision. It could be a continuation or a reversal. Got the wide range bar on the Dow, on the Russell, but not here on the S&P, not here on the Nasdaq. If the candle does form, it has to get confirmation and a follow through. We had our bearish belt hold candlestick right here, but it got confirmation. It did get confirmation, but there was no follow through, and then we came back up, filled the gap, and went back to test the highs, and with the CPI, we broke above the previous high. That was possible if we form a divergence. Now, at the bottom, when I called the April 7th bottom, there was no divergence. We just reached an extreme. And I told you this reading here at 77 could just mark a peak. But I warned you also we might form a divergence, which is now what has happened. So again, does this candle end up giving us a reversal, 3-day reversal pattern in an evening doji star? Or is it a continuation bar? We'll see. If we do turn down right here, have another possible head and shoulders. Had a little miniature one over here with the left shoulder and the head formation here, but we went higher and it didn't play out. You've got another possible head and shoulders with the reversal here on July 31st being the left shoulder, this being a head formation. Too early to tell. If it does play out, if our high from today holds at 64.80 down to our low here at 62.12, that's 268 points. That would mean that subtracted, that would, by the way, take us back to the 50 period if we had a drop back down for the head formation. If the pattern were to play out, and again, too early to tell if it is going to play out, measure down 59 to 59.44, which is just above our 200 period moving average. I don't know that this pattern plays out, but it would take out the 200 period if it did play out. Just something we're paying attention to. There is major resistance over here. Also, I wanted to point out, since our bearish bell hold candlestick, we've not even risen 1% above it. The intraday high today was 0.82% higher, and we closed just above 0.5% above that high from July 31st. We're up about 0.62% above that high with today's close. So moved just a little bit above the previous peak. Still slamming into major resistance in the weekly time frame, slightly overthrowing it, slamming into it, may not be able to close above it. Now, as we're coming up here, we're getting these divergences on the RSI, on the Awesome Oscillator, and another reference point on the MACD here is now getting the bullish cross. Nasdaq already got it. earlier this week. S&P now joining it. Again, this may be short-lived, and we could see it quickly turn back down, or if we have a continuation pattern, go a little bit higher and then turn. I'll be watching. Again, maybe we don't have an evening start. Maybe we gap higher with the PPI, but then turn lower, get a bearish engulfing or something like that. Watching this area because there is a lot of resistance here in the weekly time frame. As we're forming this divergence, the stochastic also forming a divergence has come back up to extremes here. So if we do end up selling off, or say we go higher, it's a continuation, again, do we eventually see the stochastic roll back over and the RSI tick down and complete divergences? The divergence that I talked about with these larger divergences that developed on the stochastic and the MACD, that gave us this sell-off. The RSI moved to a new high. Now it's forming a divergence, and again, the oscillator forming one in the most recent price action with the MACD. Look at the spread between the 10 period and the 20 period moving average. Here's our 50 down here at support, horizontal support. Look at the 10 and 20. Look at the narrow range between them. It's a very small space. If we start to sell off sharply, you can quickly see the 10 cross back below the 20 period. We're seeing the same thing, the narrow range between the 50 period and the 200 period on the 60-minute chart of the S&P. As we're getting this move just over 0.5% above this high and forming this divergence, we're hitting another trend line. No guarantee a head and shoulders sets up. It's speculation. We get a reversal, but we've got a candle of indecision. You can see the doji or spinning top looking candlestick here in the daily time frame. If we were to turn down, again, get a head formation and then a right shoulder, it would measure down towards our 200 period, towards 59.44, towards the low end of the cloud here at this point. Again, guarantee the pattern sets up, no guarantee that we even reach the target of it if it does set up, but you've got this divergence setting up right here. So again, I expect that we're going to pull back. I've talked about a move towards the 50 or towards the 200, the black line, the green line's at 50. And if we do, I told you I was watching this trend line here, end up breaking down from the lower boundary, back testing, could be setting up a larger rising wedge, or like I said, maybe it evolves into a channel. But I have another trend line, and that's the trend line here. Now this chart's a little busy. It's important. The trend line I just showed you is right here, this May high up here to the July 3rd high, and that was the upper boundary of our rising wedge and the lower boundary right here. We broke down from that pattern. It could expand into a larger rising wedge as I've outlined here if we come back towards the cloud, and if we get a sell-off, say like down here, or maybe a little bit lower, closer to the 200, you could have a larger rising wedge under construction. Rising wedges can do that sometimes. We've seen this with a lot of different stocks where they form rising wedges and then they make larger rising wedges, or sometimes evolve into channels. Sell off here or a little bit lower, you could have this rising wedge that looks something like this, closer, beyond our 50 or maybe closer to the 200, and then you get this final push higher. But this trend line right here is interesting in that, not the one here that we looked at a moment ago, but this one right here from the March high, which was the counter trend in the decline. That was a March 25th peak connected to our July 3rd peak where we went sideways. Then we went higher and we went right into that trend line again. Look at this. And we hit it on July 31st, which was our peak there. A little hard to see because I have the Bollinger Bands here. But we hit the trend line again. So you have three touches. You have March 25th, July 3rd, and then our reversal there at July 31st. And you even tapped into it as we kind of went sideways a couple of times right into there, leading into that July 31st high. We're just below it right now. You may hit it. Just a trend line I'm paying attention to. I pay attention to trend lines. May not reach it. You got a candle of indecision, but it could be a continuation pattern. So still possible we attempt to overthrow it, but again, it is a trend line that we've turned off of on July 31st. Seeing the March 25th peak, the July 3rd peak, that is a trend line that we did turn off of. Here we are just below it. And with that, we're at our upper Bollinger Band again. I'll bring this up close so you can see. Again, we turned off of the upper Bollinger Band, and that's one reason why I thought we had a top. We were hitting major resistance in the weekly time frame when we hit this level right here. And we hit the upper Bollinger Band and we turned off of it. I told you I thought we had a top right there. Well, we're doing the same thing. We're still hitting resistance in the weekly time frame. We're slightly overthrowing it, but you're still coming up and slamming into this upper Bollinger Band. We're just above it, closing above it. If we close back below it, you've got a possible evening star or evening doji star reversal. I showed you earlier in the video. Go a little bit higher and slam into it. Maybe you get something like this where we gap higher, but then close lower, like our bearish belt hold. Maybe we get a bearish engulfing or something like that. Have to get an evening star, but it could form. You could go higher into that trend line and better define the divergence and then reverse. So again, I'll be watching. Do we see something become of this candle with either getting a bearish engulfing following it or an evening star if it marks a peak? But it's just below this trend line, which I found very interesting. As I pointed out, again, in December, we turned off the upper band. January, we turned off the upper band. February, we turned off the upper band. And we ended up forming a divergence in doing so that ended up being a multiple point divergence. Now, this divergence is a simple divergence. This was multiple points involved. I think eventually we'll set something up like that. Now, this divergence very well could give us the pullback that I'm expecting. 6,400 area, I think eventually we go towards 66 or 6,700 or the trend line, wherever we come into contact with it in the weekly time frame that I've talked about. I think you could see something like this and develop a new trend line, possibly a new rising wedge or maybe a channel. So a trend line going back to the March counter trend high that I'm looking at connected to our recent July highs here, just something we're paying attention to. It's directly overhead. We are overthrowing some other resistance levels that I've shown you in the weekly and the daily time frame. We may not close above them by the end of the week. We are forming a divergence in the weekly time frame, but we're just slightly overthrowing this. Previously, a few weeks ago, on July 31st, we slammed right into this trend line going back to the January 2022 high here and connected that here with the December peak, and it's going to right where we're at right now. We hit it there a couple of weeks ago on July 31st. Now we're moving just above that level. Again, do we get rejection here? We're now trying to form a divergence on the RSI here in the weekly time frame. I think we're going to see rejection in this area. We'll still get a pullback and then eventually get above it. And it's at this trend line where I eventually think we will get the top here. I think we'll end up pulling back and then eventually making our way towards this trend line, likely towards 6,700, maybe a little bit lower at 6,600, maybe a little higher, 6,800. Whenever we come into contact with it, that's where I think we're going to peak. But hit it in the next month or two, it might be around 6,700, but that's the trend line I'm looking at. Again, with our linear scaling as well, we're slightly overthrowing the trend line. So again, do we get rejection here? This trend line is from the 2023 low, connected to our low here in the summer of 2024, and that's what we're back testing right now. Eventually, again, I think we can reach these trend lines, likely going towards the 6,700 area. They're very close to one another, this one with linear scaling and the one with log scaling. It gapped higher today, but then it ended with a candle of indecision in the daily time frame. We gapped higher, we came down, we filled the gap right here, and then we went back up and we got the candle of indecision. This price action in the 5-minute time frame gave us the candle of indecision. That candle of indecision could be a continuation or a reversal. If it's a continuation, we can go a little higher before the divergence completes. If it is a reversal, then the divergence could complete on the RSI in the daily time frame immediately, but we'd have to drop back below the 50, drop back below the cloud, drop back below the 200 period in order for that to happen. Our rally yesterday, gapping higher. CPI, we gapped higher again today. Do we end up gapping down? That candle of indecision is a reversal bar. If it is, I'll be watching the gap down here to see if it's filled with our CPI gap. If we do go higher, there's still the possibility of divergences on the intraday charts. We could confirm a lower high just as easily. We did reach an extreme that gave us a sell-off to come back and fill the gap here on the 30-minute chart and the 15-minute chart. I told you to be watching this upper channel line. We're also just below a trend line of resistance, showing you in this video from the March counter trend rally peak. We've come just below this level here. You still might get a divergence if we try to go higher. Do go higher and form a divergence, and you might get a bearish engulfing if you quickly turn. But the candle of indecision could still end up being in the daily time frame, could still end up being an evening star. But if we gap higher, then you might get a bearish engulfing or something like that if a divergence develops here. There is no divergence right here in the most recent price action, and neither on the MACD. You still might get one. Just below this trend line, just below the trend line from the March high connected to the July highs that I'm showing you in this video. We've overthrown the weekly resistance. Not above it though by the close of the week. 30-minute chart here. Here's the 15. Same thing here. Again, just falling short of that trend line. We still may go up here and form a divergence. We'll be watching that S&P 15-minute chart. Again, I told you I had a possible bear flag here. If we got a lower high, we moved above the previous peak. We're now 0.62% above this high right here. We came back, we gapped higher, we the gap. If we form a divergence on the 15-minute chart and the 30-minute chart, you might see the upper channel reach to form the divergence. Gap higher with the PPI. Watch to see if we close lower for these trend lines. If you can't reach it, if we do see this peak hold from today, then we don't form a divergence. Watching to see if we get a big ugly red bar gapping down would be the evening star reversal. So a divergence could give us gap higher, and if so, then you got a shot at divergence that might end up producing a sell-off. And if we do get a sell-off, you're watching, do we get a bearish engulfing with our doji? Top candlestick in the daily time frame, or is it an evening star? Just some things to consider and to be watching. Elliott wave is speculation. Counts can be validated or invalidated. We just talked about how over here a primary wave 3 just got invalidated. It's likely not done yet. I've adjusted that count. Still think we have primary wave 3. I don't think that it finished yet because we still went and made new highs to form the divergence on the RSI. So rather than primary wave 3, I'm marking that peak as intermediate wave 3. And again, I think you have a 1, a 2. I think this whole thing is primary wave 3, and then I think we'll get 4 and then 5, and eventually in a few months I think we'll see the top. And again, it's starting to look like if we do sell off in August, that could be by October, or maybe it drags out a little bit more, November. But I do think we are going to new highs. I do think we'll pull back. So I think the bigger picture is bullish, but we get a pullback for a wave 4, marking this this intermediate wave 1, 2, and this whole thing is an extended intermediate wave 3, a wave 4. And now I think we're getting intermediate wave 5, a primary wave 3, and then I think we'll get the wave 4. So again, you're watching for the divergence to play out, and then I think you get a bigger pullback, maybe just beyond the 50 or maybe something closer to the 200. We'll have to wait and see. I think it will be followed by a much bigger rally going into September and October. This sell-off, because it's been delayed, it may drag out into September. Maybe into Labor Day week, the Labor Day week there, or something like that. We get a sell-off at the resistance levels that we're slightly overthrowing in the weekly time frame. Again, last Friday, signals turned back to bullish with the bullish reversal of conditions. Told you there was risk that we now go make a new high. We ended up doing that. I thought we had a top here. I was wrong about that, and I told you I would be wrong if we ended up forming the divergence scenario. I told you if we went higher, we would end up forming another reference point of a divergence here and get a divergence on the RSI. But again, I'll be watching to see if we start seeing red bars appear. Again, we got a candle of indecision. It could be a continuation or reversal. If it's a continuation, then we could see divergences develop on the intraday charts, the 15, 30-minute, 60-minute chart, the more recent price action. Reversal, you need to see big, ugly red bar with the PPI inflation data. We'll be watching to see what happens with it. The divergences that we've had on the Awesome Oscillator have just given us pullbacks. I expect this one's going to be a bigger pullback towards the 50 or the 200. Likely somewhere in between, but then I think we'll go make new highs after that. So I'll be watching if we start seeing red bars appear in the not too distant future. Same exact thing going on for the Nasdaq, but my signals turned back to bullish on Thursday. Last Thursday, they've been bullish, and again, got now the divergences on the RSI and another reference point of a divergence here on the Awesome Oscillator, as well as the MACD. Same is true for Nasdaq. We got the divergence again, likely wrapping up primary wave 3, going to get primary wave 4, either to the 50 or to the 100 or 200 or somewhere in between. Then I think we go and get wave 5. It's likely going to go into September and October into final phase of the blow off top, but you've got a divergence here. Will it give us some kind of sell-off? CD's turned back up, but it's now making a new high. You've got a multiple point divergence. I think it'll produce a corrective move. It will be bigger than what we've seen so far, but not a complete reversal of the trend. Nasdaq had a rally today. It fizzled out. We got a black candlestick and we closed flat, just up 0.04%, up 9 points.